everyone, welcome to Pro Trader Strategies Market Commentary for Thursday, September the 28th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that comes in to impact the overall markets with my market analysis. Well, I do the same thing for you folks in these daily market commentaries, but I'm going to layer on top of it the option strategies that I'm implementing into my portfolio based on some guidelines that I've set up for you guys to follow in order to find the right strategy for any given market assumption. We don't just pick strategies out of the hat at Pro Trader Strategies. What I've done over my 25 years of trading is come up with some simple guidelines for you guys to follow to find the right strategy for every given underlying. All right, so without further ado, let's get on with the economic data and talk about how that's impacting the markets today with my market analysis. All right, across the pond, it's been pretty quiet to be quite honest, but today it's pretty good day for economic and geopolitical stuff. So we could talk about Powell's testified in front of the banking or the Senate Banking Committee. So did Mnuchin, and then we also have Williams speaking. On to the economic data, we've got new home sales, 1,011,000. That's the highest number we've seen since, I think, November of 2006. One caveat to that is the home builders are noticing that the prices are starting to come off a little bit. Well, that's because we're also seeing interest rates increase, right? We'll talk about that when we see the bonds. Bonds have come off since basically August. So obviously, if we see increased interest rates, that is going to be offset by the price of these homes. Also, then we talk about natural gas storages coming in at 66 billion cubic feet, expected to be 78 billion cubic feet. And I mentioned Williams speaking later on. Tomorrow we get durable goods, which will be an interesting number to take a look at. All right, so crude oil, 39.82 right now. That is right at the point of control where the most time and volume has been spent. That's going to be the sweet spot. I don't expect this market to really start moving back outside of this area very quickly. We might test a couple of areas, maybe 45, maybe break down into the 30, mid to lower 30s here. But right now, $40 is the key number to keep an eye on. That is the point of control. I think that's where we're going to kind of sit here for a little while until we see manufacturing start to ramp up. Well, we aren't going to really see manufacturing ramp up a whole lot. Why? Because we're seeing some more outbreaks of coronavirus, at least across the pond. They've been ramping up the numbers up a little bit over there. Here in the United States, we aren't necessarily a manufacturing sector. We're more of a service sector. So we need global economies to start really picking up, see that manufacturing pick up. And in order to do that, we need to see the coronavirus numbers start to come off a little bit there. So I think crude oil is right around where it should be. All right, gold futures finally finding a bottom, at least for now. It seems like we're finding a bottom because we take a look at this candle, and this is definitely a candle that looks like it could be creating a bottom. Now, obviously, we need a candle tomorrow to confirm this, but if we were to settle here, right now, it would look like we are going to go up there and revisit that 1923 area, which, if you guys remember, was back in 2009, I believe, where we saw that all-time high. We have been testing that. You can see it has acted as a major support and resistance for several months now. Now we've broken below that. It's going to act as a resistance if we start trading back up there. Now, why is gold coming off so much? You know, is it a flight to safety or a flight to quality, I should say? Not really a flight to safety. This is a flight to safety trade, but a flight to quality where people are putting it into the equities? Not really. We've been seeing these equities come off again. So what is the catalyst for this? Well, the markets were really pricing in another round of stimulus. And that stimulus was supposed to come back in August. Now you can see when we stopped seeing that stimulus, basically a no-go, we started seeing the market really sell off. Found support at that 1923 area. Yes, I was expecting this market to go back up into the 2000, but that's because I was pretty sure they were going to do another round of stimulus. before all these guys decided that it was time to hit the campaign trail rather than get money into the pockets of the people. Well, that's caused this market to overall sell off, because that's not going to show a further weakening of the dollar. You remember, it's basically a supply and demand thing, right? Where we have a demand aspect and you increase supply while the price goes down. We'll talk about that as a perfect example at what's happening to PENN today. Then we move over to the bonds. Bonds right now just slightly above this Fibonacci that I've got lined up. We've got the regular Fibonacci. I've got some Fibonacci extensions going on in the gold. Well, they line up quite nicely with one another, and that is the 176.20 area. The point of control is right up above at 178.20, 178.19. So I think that the market, and this is where I've talked about with the bonds since August, have gone down. Now we talk about this as the price goes, as interest rates are a teeter-totter. Right now we have the bonds going down, right? Let's just throw a teeter-totter in there. Well, as the price goes down, well, we've got interest rates that go up, right? So we're seeing an increase in interest rates on these home mortgages, which, you only have a certain budget for a house, right? Well, if the interest rate goes up, well, you can't afford as much of a house. So that kind of creates a price to start to drop in these type of assets. So that's kind of like what we were talking about with the home builders, seeing prices come off a little bit. Why? Well, that's probably a reflection of a slightly higher interest rate than what we were seeing the last time they talked. All right. The VIX is in positive territory, but well off the highs, and that's because we're seeing a big turnaround in the equities right now. Yesterday, after I got done with my daily market commentary, what happened? I mean, it was like, whoo! We pulled the rug out from underneath the markets, and we settled very near the lows of the day. But having said that, I would have thought it would have been a little bit more healthy today had we seen the Dow Jones Industrial Average test that 200-day simple moving average and find some support there. But we got just shy of that, hiding out right here at the point of control again, where the most time and volume has been spent, right? Well, that is a comfort zone. That's where the most transactions happen. That's where people aren't as angst to get in and get out, right? Why? Because when you get extremes, you break above that value area high. Well, that's where people, who are short are really feeling the pinch, and those people that are long are really itching to cover some of their profits. All right, so same thing with the value area low. Market starts selling off to those value area lows. Us longs are really starting to feel the pinch and wanting to panic, whereas the shorts are thinking, okay, it's time to cover. So that's how the psychology of the market is reflected in the power of the monkey bars and the we used to call it Stoudemire, and that's why it always comes to mind there, but the volume profile there. All right, anyway, on to the NASDAQ. NASDAQ leading the way. Just a minute ago, we were up a point and near the highs, or up a percentage point, I should say, up 74 points right now on the day. Another thing to note, we are kind of in this bit of a gray area. Yeah, there is a bit of a volume node here, not a major one, but we can see that the value area high is just right around here, and I just got done talking about it. You get extended over those value areas. That's where people really want to start to want to cover. Now, we've been talking about this rotation out of some of the tech stocks. I think people have been taking advantage of that, rotating into some of these other stocks that have not done very well. The big names are starting to push this market a little bit higher today, like Apple, I think, was doing very well, Amazon making a move, and Netflix, stuff like that. So that's bringing up this whole NASDAQ trade up 83 points, just moving 10 points. I mean, it's ripping right now as we're talking here. But again, something to keep a note, this is something where we don't really have a line in the sand for, but we do need to kind of keep an eye on this area right here, as it's found support twice. We've gotten 2 bounces off that in the last couple of days. Monday we got a bounce, today we got a bounce off that day. So that lines up with this volume node here as well, and that is right around I can't remember. I think it's 1075. So that's going to be something where we need to keep an eye on right there. Sorry, 10,650. All right, so that is a number to keep an eye on. It's not showing up on Fibonacci's or anything else, but anytime you get those tweezer bottoms where you get a couple of bounces off that same level, it's something to keep an eye on. All right, but I do think we might see continued weakness here in the NASDAQ and see some more strength in some of the blue chips or the E-mini S&P stocks. All right, the E-mini S&Ps broke below and settled below our Fibonacci here, which is lining up with 3250. Just slightly below that, it's going to act as a resistance as it did already today. And we're right at the volume point of control. You can see right here, this is for where the, where the most, should be where the most volume is, even though the volume node looks like it's down there a little bit further. I'm not sure why it hasn't switched down there. It's definitely not where the time has been spent. That's the yellow there, which lines up with the 200-day moving average. So, you know, we continue to settle down here below this 3250 area. We could easily revisit that 200-day simple moving average, which would be another, I think, 4% or so lower than where we already are. We've already gotten into correction territory. We haven't felt the pain for most people. So that is something to keep an eye on, and an idea to maybe start putting on some protection for your portfolio. All right, here's what we were seeing yesterday. This is right here where I was doing my daily market commentary, and as soon as we got done with it, it was like pull the rug out and finish very near the lows. Yeah, there was some short covering coming into the close there, but overnight inventory relatively flat, maybe a slightly short coming right into the day session. But today you can see pretty unabated to the upside, a lot of strength coming into this market. But again, we haven't gotten rid of these headwinds that we've been seeing with the overall economy. So are these some people that are trying to take advantage of maybe a bit of a 10% correction, thinking that's the time to get in? Very well could be. Some of those people that maybe have missed some opportunities or are looking to add to some of those trades that they've done very well on. You know, a 10% correction is a time that most people will start to look to add to some of those trades. So not a bad idea to get involved in the market here. I think that there's good strike locations to be had, especially if you're looking to sell some puts. Having said that, let's talk about the ones that I'm looking for. Amazon, we can see we have high implied volatility. We can also see we're heading into another earnings session. It just seems like we just got out of earnings season and we're at the end of the quarter, moving into another earnings season here. And we're going to start seeing more and more of these big names come out with some earnings. Not necessarily this month, but coming into the next month, we are going to see some earnings happening. As a matter of fact, Costco's coming out with earnings after the close today. I'll talk about that here in a minute. But we can see Amazon moving higher by about $41, up just better than a percentage point, and moving back above that value area high. Usually when we see the markets come into that value area, it starts getting a little bit more and more heavy. Again, that's lining up with the idea that, you know, the correction may not be over here. But again, holding on to 3,000, we just settled slightly below that 3,000 psychological marker there yesterday, but today rebounding back up into the 3,000 area. So I decided to go into this and sell some puts in Amazon. I went into the October, so there's 22 days to expiration. Not a whole lot of time left here, so these are the October. Went into the October and sold the 2,700 puts. All right, and it was for $28, and I'm drawing a blank here on the price that I got that trade at, $28 and some odd cents. Let's $28.50. So $28.50. So I got a credit of $28.50. All right, did it small. I'm looking to add this to my portfolio. I'm not just going out gangbusters on this as a massive trade, but if we do get that correction down here to this value area for the volume, this is the volume value area high, this is the time value area high here. So we've got the volume value area high, and that lines up very nicely with 2,700, right? that will probably act as a support if we get back down in and around that area. And I collected another $28 for that, so it puts my break even right down there at $26.71.50. All right, so nice collection there. Brings my break even just slightly even further below where that value area high is. So good strike location there. I'm not too concerned about that. I'd love to add Amazon, especially heading into this earnings season. You guys put it to me there. Amazon's probably going to come in and knock it out of the park again with their earnings, I think. So I'm comfortable with that trade there. Now, Costco is the one that I'm talking about today. After the close, we are going to see Costco. It's not going to show up for me because the computer is running too fast for that. But with Costco, I'm going to be looking at the 327 puts. So I'm going to be looking at the September. I'm going to be looking at the September weeklies that expire on the 25th. So let's just put a 25 there that expire tomorrow. The September 327 and a half puts. I'm going to be looking to sell those. If it were right now, that's right there in and around that 16 delta I talk about for trading these earnings. With this market pushing up and away from that 50-day moving average, we were testing that quite nicely earlier today. That's going to be something I'm going to be looking at, but it's going to obviously be a game time decision. So if you want to learn to trade earnings, we're heading into this earnings season. This is a great time for you guys to go there and sign up for Pro Trader Strategies, get all these earnings option strategies. We talk about strike location, days of duration. When specifically should we be putting this trade on? Why haven't I put this trade on? Well, it's not following my guidelines that I talk about in those webinars. So please check it out. We talk about the specific time frame we should be looking to put those on for a given earnings trade. All right, so let's move on to PENN. This is what I wanted to talk about with PENN. You can see a big sell-off today, down 6%, 6.5% right now, down $4.50. You guys remember I did some covered calls in this trade where I sold the 85 calls in there. Those are looking pretty nice. Just lowering my overall cost basis. I bought it for $4.50-ish. I think it was $4.49. Sold those short calls against that for just about $1 and change there. So lowering my overall cost basis of what I paid for this by selling those covered calls. I'd be happy to sell it at $85, to be quite honest. This is a reopening trade, right? It's just as long as the casinos. But why are we seeing this fall off? We're seeing Portnoy got like 30,000 people signed up for his trading, his gambling application that he has in Pennsylvania. Only people in Pennsylvania can do it. So 30,000 people in Pennsylvania signed up for it. They're cranking out some commissions there, or making some money on that. Now, so let's talk about this. Why is this market dropping? Well, what we can talk about here is Econ 101, right? So right now we have, what is this? This is the price. We have the price line here, right, for the Econ 101. So we've got price here, and we've got the quantity here, right? So what we do is we talk about the supply and demand curve, and we've got, let's say, supply of stock. All right, this is the supply of stock here. I don't want to go too far off, so this is supply. All right, and then we've got demand, which is a curve that kind of goes like that. Right now, that gives you where your quantity is currently and your price. So we could say yesterday we were looking at, a little bit higher than that. We were looking at about, let's just call it $70, right? Well, what happened today? Well, today they added more quantity. So we basically need to move they added 14 million shares. 14 million shares of common stock in PENN. So plus 14 million shares. Well, if this is our quantity, we've got now another 14 million, add 14 million shares to it. Now our line is there. So we've got a supply line just like that. So we've got demand here. All right. So that lowers the overall price because of the supply-demand curve, and that puts us at $64 there. So that's kind of how that all is working out. That's why we're seeing this drop. It's not having to do with the reopening trade as much. They came out with good news. They just released how many people they had signed up like really quickly, just in a matter of a week or so. They got 30,000 people. I mean, Portnoy is the marketing genius, to be quite honest. So that whole move is what's really causing this market to fall off there. All right, so I got a little long in the tooth, but this is important stuff to talk about. That's why it will help us keep our powder dry, knowing what's going on in and around these different types of trades. All right, so that's all I got for you guys. Please take a moment to go over our disclaimer. Also, check out the webinar we got going on today. It is going to be on our roadmap to trading options, where I'm going to talk about the specific guidelines. We come up with an assumption, kind of like what I did with Amazon. Maybe it's going to be with PENN for you guys or whatever. We'll find a strategy or we'll find an underlying where I have a market assumption, and I'm going to talk about, and this is going to be one we're either going to pop or we're going to drop, right? And what we're going to do is, how do I find the right strategy for that pop or drop? Well, I've got one for you, and we'll talk about that today in the webinar. So please go to protraderstrategies.com, sign up for that. Also, give me a thumbs up on this video if you liked it. You want to see more content, reach out to us at trading@protraderstrategies.com. Let us know what you guys would like to see, and we'll try and get it out there for you. All right, that's all I got for you, other than if you can't take that, take it easy.